Increased geopolitical risk has changed the whole attitude to the markets over the last couple of weeks as we went into 2020. And of course, the most recent developments have been around Iran and the involvement there in the region militarily from the US and of course the Iranian response to that. This has seen gold at near 7-year highs, and we've seen a push up as well for the price of Brent crude. Let's take a look now in some more detail at the minerals market with John Mayer from SP Angel. John, welcome. Happy New Year to you. What a way to start 2020. I guess from a mining analyst point of view, and of course that's how we approach this news, it really does sort of change some of the aspects of the markets as we look out from this point.
Well, it does. And remember, the city has a long-standing rule not to look to seek to profit from the potential for war. So I'll be careful about what I say, but clearly lots going on in the Middle East right now, heightened geopolitical risk. The gold price has risen on the back of this, but the gold price was rising anyway. Central banks have been buying gold, and in fact, Mark Carney, the governor of the Bank of England, talks today in the Financial Times about central banks not having enough reserves for the eventuality of a potential recession. So that tells us that central banks are really thinking about bolstering their reserves, not just currencies but other asset classes, and gold is naturally one of those. We also know that from the last Federal Reserve minutes that they were looking to allow inflation to rise above the 2% target that they have currently set. In fact, they struggled to even get there. So again, now we see US major funds like PIMCO looking to buy inflation-proof or inflation hedges, more in the bond market, but some of those will also buy gold as a natural inflation hedge anyway. So there's a bit going on there. More fundamentally, Indian buyers for the Diwali festival back in September, I think it was, they were holding off from buying gold because they thought the price was high then. Well, these guys will generally come back into the market over time, as will other consumers who held off while the price was running higher. They'll get used to the higher price and probably support the price here.
To what degree should we look at silver in the same light as gold? Let's bring up a chart of silver, because if you look at the comparison, I guess quickly dart back to gold, you've seen this rise here, and you see, we just said near at 7-year highs, but spot silver has yet to achieve the highs that we had back in September last year. This certainly seems to lag the price of gold. What should we be aware of when looking at silver compared to gold as an asset class in the precious metal space that might give a hedge against some of the risks in the market?
Well, silver does follow gold to some degree, and personally I've always felt quite bearish on silver versus gold, but actually there are some new industrial uses for silver coming through, and it's gaining more and more prominence as a better conductor for solar panels and other sorts of things. So I think actually silver will see more fundamental demand, and that might be helpful as well. But yes, there is a link between the gold and silver.
Yeah. While we're still on the metal space, I just want to take a very brief look at palladium. I want to get onto oil in just a minute, but very quickly look at palladium. We've seen this rise up, and in fact, we've had record after record going into the back end of last year, and it continues. Now here we are at 2101. What is it about palladium that's going on in the market that we should know about that might give us a steer on how this is going to move ahead in 2020?
Well, the all-important fundamental is that palladium is really used for gasoline auto catalysts. So you buy a petrol car, it's got a palladium-rich catalyst in there, and if you buy a hybrid, like a Toyota Prius hybrid, there's a lot of palladium within the catalyst there, because the hybrid engine is often cold, and therefore needs to work needs to be a very effective catalyst for that stop-start type motoring. So because the Prius wants to be seen as a really green car and have virtually no emission, those hybrid Priuses have extra loadings for palladium in there. And of course the other auto companies are putting more palladium into their catalysts to ensure that they meet the emissions regulations that they were cheating previously. So that's what's really driving it. And at the same time, mines that were able to mine more palladium-rich areas will have done a lot of that. So there just simply isn't enough palladium coming out of those mines to meet the demand as we see it right now.
So going back to the chart very briefly, would you say it is fair to say that we could see more gains? I mean, this has been such a run-up recently, and it's purely driven by the fact there's lack of supply?
Yeah, I mean, you don't go and find palladium on its own. It's usually there with some platinum, and it's very hard to get these mines up and running, and they're long, long lead times. And in South Africa, there's been so many other issues with unions and power outages, where simply the power supply has been cut for hours on end to these mines. It means you have to get everybody back onto surface for health and safety reasons. It creates more fundamental problems in the mines. And I worked in these mines years and years ago, and if you stop the normal rate of face advance, then actually the rock can explode in front of you, and when you get back down there, you'll find that it's a mess, and you've got to clean it up before you can start all over again. So it actually really, any interruption to the mining cycle causes a real problem for production going forward. So the problems they've had at Eskom, the power utility in South Africa, lead to bigger problems with the whole supply chain.
You mentioned electric vehicles, and I've got to look at electric vehicles in the context of this chart, which is Brent crude. Now, Brent has risen recently. We've only just actually seen it spike up to levels not seen since September last year. And of course, the highs that we had back in April were at 74.94. To what degree is this rise that we've seen so far and the potential for this? And I know some oil specialists are possibly looking at $150 a barrel if we get a real serious blowout in the Middle East. God forbid. If that does happen, it does come to pass, we could well get those sort of levels. To what degree does this help us in understanding the importance of electric vehicles from this point?
Well, I mean, if you're a policymaker in China or in the West, you're going to want to accelerate the use of electric vehicles. You want to get more electric trucks, particularly lorries and things like that, onto the roads to make us a little less dependent on the oil price and on the availability of oil. Because I think this is, for me, this is more about the potential oil supply disruption more than the actual price. Because if, for example, the Iranians close the Straits of Hormuz, and I wouldn't want to be a sailor on a ship going through there right now, or if the Iranians use one of their proxies, Hezbollah or one of the Yemeni groups, to bomb oil installations at Saudi Aramco in Saudi Arabia again, as they did before, then not only do oil prices go higher, but oil could become problematic. And so at that point, you really want to have more vehicles on the roads which are driven by electricity, because you can create electricity by other means, by burning more coal or more windmills or more solar panels or hydro, but you might not be able to get as much oil as you wanted to. So it helps to give everybody a bit more security. And if, God forbid, we have real problems with oil supplies, then it would be useful for people to have a few more electric vehicles around.
One of the other things we've spoken about before, again going back to previous discussions about electric vehicles, is the importance of copper in all this, in feeding electric power points to generate enough quick supply in terms of electricity for your vehicles. The copper price hasn't really stirred too much. It has seen a rise since the beginning of December, where it was down at, 58.13, and the high is, 62.65, but not nearly as high as we saw back in April last year. Why has copper not responded, and what is it about copper that's keeping a lid on the price? And if we go back further, you can see, in fact, what was that, June 2018, it was all the way up at 73.28.
Well, to be a little bit controversial, I do think the copper price is being manipulated. I mean, effectively, if you talk to metals traders, they reckon that all metals are being manipulated most of the time by one party or another. China is a huge buyer of copper, and I think I do think they've been serving, or somebody's been keeping the price down. But in reality, if you look at the LME and other inventory levels, metal has been taken out of those warehouses in recent months. And so someone's been buying the market up, even though the price hasn't really been moving. Now, it may be that US hedge funds have been shorting the price because they look to short things on macroeconomic indicators. They were looking for the global economy to slow down, therefore to use a bit less copper. I'm not convinced the global economy is going to slow down quite that much, and we've just seen big demand for iron ore in China, for example. That suggests that things are getting a bit better. Now, some of that was restocking ahead of the Chinese New Year, but it says to me that they have a slightly more optimistic and favourable view of what they expect going forward. So it's not the end of the world out there. Okay, Germany had some poor industrial trade figures in November, but still the wheels haven't fallen off the global economy yet. And if anything, what's going on in the Middle East is likely to ramp up production of certain types of equipment, and that is likely to use more rare earths, more copper, more metals, one way or another.
And of course, the supply of copper is very important from this point on, looking out to getting more copper on the market. I know one of your clients, I think, is Arc Minerals, that reported this morning that it's found what I think it found or says was a better display of copper as a base metal within its exploration.
So they have a project in Zambia called the Shazaya East project, and the results today were fantastic. I thought actually they just finished the drilling program because they're into the rainy season for a couple of months now, and so the drill rigs can't move around very easily. But they had 69 meters of 0.61% copper, and within that there were 3 sections of copper grades of over 1%. Very nice. That means it's there's more copper in this deposit than we knew about previously. As they drill it, it seems to get bigger and better. That's all good news. And what they're looking at is maybe actually getting cash flow out of this project early, because they have a demonstration scale plant just down the road at another mine, which they're running on a small scale basis. And actually they could ramp that up and produce 10, 15, maybe $20 million of cash flow out of that plant this year if they wanted to. So that's good news. They've got 4 million in the bank already, and that's quite nice. They're quite insulated. They don't have to come to the market maybe this year. They can carry on drilling and expanding what they do. So they're very well set.
And as I said, a reminder that you are Nomad and broker for.
Yes, we are, yeah. So we work quite closely with them.
Yeah, fine. So how's 2020 started for you, and what are you looking at as some of the big motivating factors in the sector, do you think, in mining?
I still think the electric vehicle theme is going to be the big one for 2020. I think it's going to accelerate more than some of the figures suggest. Now, okay, there are some big hockey stick forecasts out there in the market, but what drives me is that there are some very significant improvements in battery technology going on at the moment. Now, let's forget about the guys in the universities that make wild claims about 10 times battery capacity and charging in nanoseconds. But yes, there are real advances going on. They are happening now. The batteries that are going to be produced in the next few years will be very much better. There are going to be a series of small incremental improvements, and then I think there'll be some big ones as well. So in 10 or 20 years' time, the batteries will be 5 to 10 times better than they are now. They will charge faster. They will hold more capacity. The target at the moment for these companies is to get a battery pack that will drive a car for 1,000 kilometers without recharging, and that will be a game changer. And we can now see the way to do that. You can do this already. There's a company called Oxis Energy that produces batteries that will do 300, 400 watt hours per kilogram. Those batteries are expensive, but it isn't going to take that long to figure out how to make those batteries more effectively, more cheaply, and to get that into more mass production. At the moment, they're kind of made by hand, but they're trialing machinery that can make it on a more automated basis. And I really see that this is coming.
And of course, also the speed of charging, that's so important.
I mean, at the moment, you've got to go and have a bit more than just a cup of coffee while your Tesla is recharging. Yeah. But sure, I mean, at the moment, it would pay if you can put a charging point at the front of your house and charge overnight. Then easy peasy, and the cost of motoring is about a fifth of what it is for petrol or diesel. So the economics are really, really good. I mean, okay, an EV costs you a bit more capital up front, but the chances are it will retain that value quite well, in fact. So I see electric vehicles as a premium product, but the cost, if you do anything more than 20,000 miles a year, I would have thought it works out pretty well.
Okay, all right, John, thanks so much indeed. Look ahead to 2020. We're with John regularly. He comes in once a month to take a look at what's happening in the mining sector, so you can join us again at the beginning of February. That's John Mayer from SP Angel.